All right, everyone, welcome back for another episode of Carnivore Trade. Today's July 7th, 2021. Markets again closing at highs. I believe the S&P set a new all-time closing high here. Yes, it did. So 434.52. We did have the Fed minutes earlier today. They didn't really say too many things new. There was a little bit of tapered talk, but obviously the market shrugged that off. Again, it wasn't anything too serious. Ultimately, name of the game is yields down, and that's helping to lift tech up, and that will continue until yields change. So I'm still looking for a little bit more for pullback. Again, I talked about the 382 as a possible entry. It may be a little bit lower though. We'll have to see. We'll have to see and wait on pattern here. Again, I'm looking for a move towards the middle of August. Again, it would probably coincide with Jackson Hole. But this area right here is also very nice, right at the 1.2 area. You see this previous consolidation, and here's your breakout. So a back test of that would be a good entry for me on the long side. As for the dollar index, dollar finishing positive again. So again, dollar putting in a little bit of divergence here. Market's making all-time highs as the dollar is making all-time highs, and bond yields are coming down. So again, we've got to keep an eye on that. VIX coming back in a little bit today. I do think it could potentially make another low here. So we'll have to see and wait. And at that point, I'd probably be a buyer. If we push and make a new low here on the VIX, I think that would coincide with a blow-off move. You know, I've been talking about that possibly for the last couple months, really. But we haven't really gotten that extended. We haven't gotten to like this area here where I'm looking at in late August of last year. I think I don't think it'll take us that long to get there this year. Maybe in the middle of July, maybe the beginning of August, we get to that blow-off area. But that's where I'd be looking for a real actual market turn. Energy down again today. Crude taking a hit. A little bit of a follow through here. I do expect a pullback here. First stop is going to be 67. Or 66.60 in that area. And if you get through that, you're going down to 62. But overall, crude just kind of cooling off a little bit here as it goes into a bit of a corrective mode. Copper, positive on the day, but again, kind of just holding this pattern. So the metals kind of doing the same thing here, just kind of holding up. Gold holding up, though. If it gets back above these moving averages, it's in good shape. And silver kind of just in a holding pattern as well. But ultimately, I wanted to just talk a little bit about these meme stocks because it's actually getting out of hand here. This company, Newegg, had a ridiculous squeeze in pretty much like an hour. It was halted a couple times, looks like, and it was up, what, like 500% or something like that in the last couple days. So crazy gains. But what I really want to talk about is nothing to do with the actual stocks themselves. It's like this cult-like thing that these newer investors think that it's about sticking it to the suits or something like that. And let me tell you, you guys could not, and I'm probably going to get a bunch of dislikes on this video, but that doesn't matter to me because people need to hear this. You guys don't know what you're talking about. You're not sticking it to any suits. Like, let me repeat that. There's no suits being stuck. This right here, this volume is not, this is not a bunch of guys in their basement with stimmy checks. This volume here, 100, 200 million shares on GameStop. This volume on AMC, 100 million shares. Like, people in their basements, retail traders cannot do that. They can't. This is institutions. Institutions are making money hand over fist off of you guys. And they're pumping you. They're pumping these stocks and then unloading them to you. That's what's going on. Like the gamma squeeze that is caused by this call buying. Yeah, there might be a little bit of retail investors that are starting it, but the actual push, this 200, 300, 400% in matter of days, that's institutional money. So while you might be sticking it to one suit, you got your Melvin Capital that went underwater in January. Guess what? 100 other hedge funds were making record profits off of you guys. So they're literally sitting there laughing at you, thinking that you're sticking it to the suits, quote unquote. But really, they're just making you guys into eventual bag holders. Now you guys are talking about, oh, AMC is going to $1 million a share. Yeah, well, how's that working out for you today? You guys are holding the bag. I just really need to get that off my chest because there's too many people who need to hear this. So ultimately, you know, this will continue going on for a little while until there's some sort of correction, and then the bag holding is going to get really bad, and the emotion is going to get really bad. It's already getting bad out there, and that's kind of why I'm doing this video. I just want to pull up Twitter here really quick. I was talking to Gareth Soloway, who's one of the best in the business, and you know, he's talking about he had an alert where he shorted AMC yesterday, made almost 20%, and someone said, like, I can't be a part of a service that bets against retail. I mean, this, what do you mean? All it is we're just trading disparities in price, like he says. And by the way, no CEO with their golden parachute cares about you unless you're a billionaire who owns 10% of their company. If hedge funds don't care about you, you're not going to affect them. You're not affecting their bottom line. You're not hurting them. And, you know, like I chimed in and said, hey, look, they're not losing money on this. They're contributing to the gamma squeeze themselves. They're the ones with the volume to move markets. A kid in their basement with a $500 check or a $1,200 stimmy check cannot move a company like AMC. It can't. Like, no matter how many calls you think you can buy, it's not that. It's the institutions and the algos that are doing this. So, and again, the institutions know they can pump these stocks, especially the thinner ones like Newegg, and these retail traders, quote unquote, will jump in and chase them. And then you've got all these, you know, these YouTubers who've popped up in the last year who, you know, they're getting countless views or whatever on their channel because they're using the meme stocks like AMC and GME and all these, basically just to get views because they, you know, too many people think that they can just get rich overnight, and it's just not how it works. So anyway, I just had to get that off my chest. If that helps anybody, great. In any case, that's pretty much all we got for today. Nothing's too serious happening in the markets overall. We had the Fed minutes meeting. But again, it's all about yields. So when anything changes, I will be sure to let you know, keep you guys updated. All right, guys, take care and have a great rest of your night.